What's deadlier in the US? Sharks or deer? Most people say sharks, but it's actually deer. And that's because of car collisions. Fear tricks the brain. We worry about what's dramatic, not what's likely. And that same fear hijacks how money decisions get made. The brain is great at keeping humans alive, but not so great at managing money. It loves vivid, scary risks and ignores the slow, sneaky ones. Let's explore how fear messes with investing and 5 ways to fight back. Let's take sunlight versus nuclear reactors. Nuclear disasters sound terrifying, but more Americans die every year from skin cancer than from radiation accidents. Or think about travel. Plane crash brings a vivid movie scene. Fireballs, screams, explosions. But driving to the airport is far more dangerous. The brain doesn't weigh numbers, it weighs images. In money, the same mistake happens. People obsess over stock market crashes while ignoring inflation. Crashes are rare, but inflation quietly erodes savings year after year. Vivid doesn't mean likely, and boring doesn't mean safe. Okay, let's talk about the brain's panic button. Inside the brain sits a tiny almond-shaped alarm system called the amygdala. It fires fear signals before conscious thought. Perfect for dodging snakes, but messy for money. A sudden market drop burns into memory like branding iron. Later, even a small wobble sparks the same panic. Selling too soon feels like survival, but usually locks in losses. The first feeling is a signal, not a command. Now, let's imagine 2 jars. Jar A has exactly 50 red and 50 black marbles. Jar B has 100 marbles, but no one knows the mix. Most people pick Jar A every time. That's ambiguity aversion, avoiding the unknown even when logic says it could be fine. In markets, investors prefer companies that feel predictable, even when they're overpriced. Confusing or underanalyzed stocks often get ignored, which can make them bargains long term. Unclear doesn't equal unsafe, and clear doesn't always equal a good deal. Okay, let's talk about crowd brain. Groups create crowd brains. When everyone cheers, confidence rises. When everyone panics, stomachs drop. Brain scans show that social pressure literally shuts down careful thinking. Disagreeing with the herd lights up the brain's pain centers. It actually hurts to go against the group. If confidence only shows up when everyone agrees, the risk meter is broken. A fast food chain once had a news story about a customer finding a finger in her chili. The company's stock dropped millions in value until it turned out she planted it herself. The business recovered, but anyone who sold in fear lost big. Markets punish knee-jerk reactions. Feeling big doesn't mean being big. Okay, now that we've gone over that, let's talk about the 5 habits to fear-proof money. Number 1, cool down clause. Make a rule. After scary headlines or big drops, wait 48 hours before acting. Fear will fade, but logic will return. Number 2, use words to cool pictures. When prices fall, ask in writing, other than the price, what has changed? Or, are my original reasons still valid? Or even, if it was good at $100, why is it bad at $80? Writing usually calms the panic loop. Number 3, track your feelings. Keep a diary. Excitement, fear, boredom, patterns appear. Excitement often means overconfidence. Fear often means opportunity. Treat feelings as signals, not instructions. Okay, number 4, pre-decide the boring backbone. Automate contributions into a balanced portfolio. Rebalance when markets swing. Volatility becomes a buy low, sell high system. And finally, number 5, the anti-herd checkpoint. Before following the crowd, check with someone outside the group. Ask, do these arguments make sense? What am I missing? Independent feedback breaks herd thinking. Now, here's the real risk. Crashes are loud, and inflation is quiet. One screams today, the other steals every day. The best defense isn't panic, it's a plan. Steady saving, diversified investing, and regular rebalancing. So, in closing, the brain isn't broken. It's just built for saber-tooths, not stock charts. Name the fear, slow it down, write it out, and stick to a plan. Fear-proof the brain, and the money will follow.